The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, company live from TFNN. Thanks for kicking off your trading day right here with me, and we start things off in the green. Markets higher, quite the clawback yesterday, and we're beginning the session this morning in higher territory. S&P's right now up about 0.3%. We got ADP jobs numbers out this morning. That number will kick it off. 63,000 jobs added in February. That's private data from ADP. That number, a slight uptick from the 11,000 that they had in January. That's the biggest number going back to July of 2025. The number the market was looking for was 50,000. So we take that in stride. We're higher on the S&Ps. NASDAQ 100, we're up by 0.6%, up 143 points. And how about being almost 600 points off of where we were at the yesterday lows? We're above yesterday's highs. You're up by 0.6% in the NASDAQ 100. Dow up by 0.3%, up 132 points, 48,693. The Russell up by 0.8%, 20 points in the green at 2633. Bitcoin, check it out. We're up near 72,000 on Bitcoin as you got a little bit of a cup formation as you're rolling higher in crypto. 71,955 in Bitcoin, up by 5%. Ethereum up by 5% as well. 2,083. Crude tensions easing a bit. See that volatility? We hit a high of almost $78 yesterday intraday. We got above $77 in the early hours today. This morning, we've backed off a bit. $74.04. Crude off 51 cents on the session, but $74 for a barrel of light sweet crude. And then we jump to yields, the dollar and metals. You jump over the 10-year. We got the 10-year right now, negative by 3 ticks at 112.29. The 10-year yield is 4.08. Okay, 4.08. You get some tariff talk out there today as well, with the Treasury Secretary saying global tariffs, 15% tariffs start this week, and predicting Trump duties return to old levels by August. That's some of the headlines out there. But nonetheless, 4.08 on that 10-year. You jump over the dollar, back under 99. Quite the acceleration yesterday to 99.68. We're at 98.89. The dollar off 159 ticks, just under 99. And you jump over that gold contract. And boy, that was quite a day yesterday, right? I mean, you basically had 4 thrusts lower. Began at about midnight. The first one at 1 a.m., 4 a.m., 7 a.m., and the lows made intraday at about 10 a.m. We've climbed since then. Gold up by $62 or 1.2%. Silver right now up $1.80 or 2.1% at 85.28. How about that sell-off in silver? Almost $20 from highs to lows in about a 48-hour period from Sunday night futures to Tuesday morning. Silver, now you're almost $7 off those lows, up $1.72. You jump over to platinum, up by 4.6% or $96. You jump over to copper right now, trading at $5.91. We jump over the VIX. Quite a spike yesterday in that volatility index, up to 28.15. We've backed off a bit. The VIX down $1.10 on the session, 22.47. We take a look at that volatility index. Had a great conversation with Basil yesterday afternoon. And yeah, you talk about this VIX. Now, we've abated a bit, but boy, you know, not necessarily that the market knew what was coming, but look at the way this VIX is just continually ramping up. Okay, and now if you get a pullback to the trend line, you're only talking about a VIX pulling back to 18, right, where we're chopping around. It's going to be difficult to see if we can get that VIX on a much lower level as, boy, even on this pullback, okay, we got the S&Ps, all things considered, folks, just chopping around near 6,750 and 7,000, right? We got a 250-point consolidation range that we reached last September. Now we've gone down to 6,500 on a couple occasions, the October pullback, the November pullback, some tariff fears mixed into there. But all things considered, we're just chopping around at a consolidation. And meanwhile, the VIX is just higher prices since when? December 24th, man. Everybody was ready for Christmas Eve. No one was expecting anything to happen in the market. But since we've gotten back from the holidays, tensions ratcheting up, tariff volatility in there. Now we got war volatility going on in Iran, and that is going to add some problems with crude potentially, as that's quite an acceleration. 74.16. We'll be talking to our man Teddy Kegstad. We'll talk some currencies. We'll talk some commodities. We always talk a little crude. He's coming up at 30 past the hour today. All right, folks, let's jump around. So we kick it off with jobs. Private sector payroll, 63,000 in February. The market was looking for 50,000, as I mentioned, and yeah, that's a solid month. When cuts are in focus, when inflation is getting talked about right now, when we're all trying to figure out what the war is going to contribute to this market, to inflation, to yields, to the dollar. But guess what? Private payrolls, they chug on. 63,000, biggest number since July. And yeah, you go back a year ago almost, and only 1 month have we had higher private numbers in those payrolls at 63,000. Workers who changed jobs, 6.3% increase. Those who stayed, 4.5%. I was having a great conversation with a good friend in business yesterday. And we were talking about inflation numbers, right? We were talking about the dollar, the strength that dollars had, how the market's reading into what's going to happen with the war in Iran, why the dollar was strengthening, what was happening to yields and metals. And we were talking about the wage numbers, and we were both talking about how remarkable it is that even today, the numbers consistently keep showing that those, even in the same job, are at 4.5%. Now, the quit rate, I think, is way down, right? People are not as comfortable quitting right now that they're going to get another job as quickly as they want. That's a decent ADP number. But it is remarkable when you think about in 2026 that people who stayed in the same job were getting almost a 5% increase compounded on the numbers they got. Some of these numbers, folks, during COVID, if you were changing jobs, you were getting like a 15% pay increase. If you were staying in the same job, you were getting like an 8% increase. Now, the income disparity between the haves, the have-nots, the K-shaped economy, all of that, okay? I imagine on the upper end, that's more true than ever. And on the lower end, with AI in focus, productivity in focus, it's going to be very competitive at the bottom end right now when you're talking about wages and you're talking about productivity and what certain employees can do, forgive me, with much more efficiency. But yeah, big numbers, and you're talking about 26 million U.S. workers, and yeah, almost a 5% pay increase. So when you look at numbers of, what we're making in 2020, right? What you were bringing home, the cost of a house, all that stuff. Man, you run those numbers from 2021. We're 5 years out, okay? Now, COVID hit in 2020. Inflation started raging in 2021, though. So it's been 5 years since we've had real inflation, right? You do those numbers, folks. We had 5% a year. Is 25% not compounded, right? I'll get it. So it's big wage increases, and those are going to be inflationary. Gold is not going back to $2,000 an ounce, folks. Not happening. All right? But I still keep talking about this October volume out there. Quite a pullback yesterday. We'll take a look at some of the volume numbers in metals, in indices. Come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the gold contract right now up $60 at 51.81. S&P's up by 28 right now. And we'll see what kind of action we get today. You jump to some of the volume numbers, and on a weekly basis, folks, we're almost going to do as much volume as we've done any of the last 3 weeks already. It's Wednesday morning at 9:20 in the morning. Pretty remarkable when you look at that action. We've done 560,000 contracts in gold right now. You're coming into 656 last week, 466, and that was a shortened holiday week, February 16th, and 620. These 2 weeks, February 9th and February 23rd, full trading weeks, folks. Full trading weeks doing only 600,000 contracts. We've already done almost 600,000 contracts, so it's a big week of volume, some big days, some big movement, of course. Silver, not quite the same spike in volume. Right, last week you do 303,000 contracts, but we're already at 200,000 contracts, as much as we did almost the holiday week of February 16th. You take a look at the volume in some of the indices, and yeah, we got an uptick in volume yesterday, especially. Yesterday in the S&Ps, almost 2.2 million contracts. That's the most volume you had since that acceleration in January to lower prices in a bid. NASDAQ 100, not quite as pronounced, but yeah, a volume uptick, to say the least, back to the lows of February 17th, the lows of February 5th, and you had the pullback there January 20th as well. You take a look at the weekly, and we'll see. You know, right now you're at 1.5 million contracts. 2.6 was last week. The biggest one hanging out here, 3.3 million contracts. The week of February 2nd, and the NASDAQ 100, you take a look at the S&Ps, we're at about 4.3 million contracts right now. And yeah, so the military identifying 4 of the fallen soldiers that were in Kuwait, and one of them right down the street from me, this gentleman, from Winter Haven, Florida. Cody Cork, 35 years old. Now, yesterday we were talking about 4 weeks, folks. Okay? And you want to talk about moving the lines pretty quickly? First, you get the comments out there that Hegseth sets a new time frame for the war, saying that Iran cannot outlast America. So that's an unlimited timeline when you're talking about war. And if you want a little bit more concise number on there, he put 8 weeks on there. Okay? Saying it could last 6 weeks, 4 weeks or less. I mean, they're arbitrary numbers, folks. I just want to bring those statements to the record because, when you're talking about this can last 4 weeks, it could last 6 weeks, and then we talk about that we can outlast the Revolutionary Guard in Iran, we should all be skeptical of those types of statements. 4 weeks, 6 weeks, etc. And there it is, yes. Saying it could last up to 8 weeks. Various time frames for the conflict. Saying it could last 6 weeks, 4 weeks or less, up to 8 weeks. We should all be skeptical of that, okay? All of us. And that shouldn't have to do with politics, folks. See how it plays out. But nobody's talking about worst case scenarios. Everyone's talking about best case scenarios, as is usually the case when wars get started and servicemen and women start dying. You're not hearing the worst case scenario, you're hearing the best case scenario out there. And when I don't want to hear that we can outlast Iran, because that is an indefinite timeline, and that seems like what they all turn into. All right, let's talk some fundamental news. We take a look at Apple. So, Apple shares, you're flat this morning. And yeah, they're raising MacBook prices. Yesterday is what they're coming out with. The M5 chip, new display signals. They rolled out new MacBook Pros and Air models yesterday. Some volatility in Apple yesterday. The MacBook Air prices are going to rise by $100. And how about the 16-inch M5 Max MacBook Pro? Almost $4,000. Some of these Macs, man. Whew. So Apple's Mac business saw sales drop almost 7% to $8.4 billion. So they're trying to up that one. We jump to some of the other tech companies. We jump over to NVIDIA shares. Quite a consolidation NVIDIA's got booming. You got a couple big days of volume last week following their earnings. We take a look at the weekly on this thing. It's something to watch, folks, that earnings. You took out a lot of trading on volume there last week. This week we've done 387 million. Last week you're at 1.2. Probably not going to challenge that one. And we got a little rollover technically. You look at these indices. I was talking to our man Basil Chapman yesterday, talking about the S&Ps, talking about the NASDAQ. And yeah, especially when you combine some of the volume spikes that we got to lower prices out here. All right. So yesterday it was Target. Quite a pop yesterday for Target shares. And today we jump over to Ross. Look at this bid ask. That's not it. ROST. I was like, what's going on? There it is. So they make $2 a share. Market was looking for $1.90. They come in and they beat on revenue as well. Sales up more than 12%. Look at this run, man. All right, we'd like to see a little bit more volume. This nice acceleration from November on a weekly basis. You just keep getting a little bit less volume each time you're climbing higher. But we're going to open well above those highs at 212 today for Ross. TJX, another high flyer in retail. You want to talk about channels, folks? Put this one on your radar. This thing. Just been waiting for a bounce to the lower part of this channel line. You're talking about a channel from 2022. One of the other great channels out there, Mickey D's. You going back? to 2015. How about that one? On a monthly basis, it's a pretty tight channel. You're talking about a range of about $50. And over the period of 10, 11 years, you've gone from 100 to 332. Mickey D's right now, slightly in the red this morning. You know, some of the moves in this market, folks, are so large that 10 and 15-point moves in the S&P don't even register right now on the charts. And that's because I have an S&P chart that's spanning 100 points from lows to high because the thing's moving 200 points. In intraday basis occasionally. Exaggerate slightly, but pretty close, man. We jump to some of the crypto equities. Yeah. Bitcoin, when you get Bitcoin above 72,000 almost, look at Coinbase, up by $13 right now. MicroStrategy catches a bid. Be careful in that crypto sector, folks. We got volatility. We're coming back for the opening bell. S&P's up by 17.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. We got a NASDAQ 100 up by about 0.6% right now, up 168 points, 24,933. You got the Dow right now, right under 49,000. We're about 1,100 points off of the lows of yesterday. 48,808 Dow up by 250 points. The Russell up by a full percentage point at 26.38. We check in on crude. Crude down 26 pennies, trading at 74.33. And you check back in on that dollar right now. 98.86. And we're coming up with Teddy Kegstad at 40 past the hour, folks. We talk to Teddy every Thursday at 9:40. We'll talk some commodities and some currencies coming up after the next break. So talking yields. And yeah, shouldn't be surprising that everybody's talking about uncertainty, right? We're all not quite sure how this is going to work out. Everybody's speculating, folks. Okay, nobody knows. That's why I keep highlighting all these comments, like somehow there's some certainty that yesterday it was going to be 4 weeks and today it's going to be 6 or 8. You got Fed governors out there, Williams, Kashkari, pointing to new uncertainty. You better believe it, man. Okay, right now it's just too soon to know what imprint this has on inflation or how long. That was Kashkari, Minneapolis Fed president. Now, with the geopolitical events, we need to get a lot more data. They want the data as usual. And then you had New York Fed President John Williams, separate event. Financial markets were so far reasonably muted, and that oil prices had moved up, but not yet in a dramatic way. Yeah, a lot of people are calling for the potential of $100. Okay, $72, not dire, but boy, $72, $74. We were just trading at $58. And yeah, they're going to wait to see how persistent it is. Gas prices may affect Europe much more profoundly. Williams was talking about the important question is quantitatively, how big of an effect does it have on the U.S., how persistent those effects are in terms of price stability. If inflation follows the path I expect, further reductions in the federal funds rate will eventually be warranted to prevent monetary policy from inadvertently becoming more restrictive, Mr. Williams said during his prepared remarks at that event. Williams said there's been promising signs of stabilization. Given the lack of second-round effects and well-anchored inflation expectations, I expect the tariffs largely to have one-off effects on prices. We'll see how it plays out. All right. Now, when we talk about mortgage rates, yields, homeowners, stay put for 12 years. That's the number right now. Yeah, American homeowners, the typical homeowner, staying in their homes for 12 years as of December. But guess what? I say guess what is in 12 years, right now, okay, takes you back to 2012. Well, what's remarkable is that homeowner tenure peaked at about 13 years in 2020, right, when COVID kept Americans at home. Since then, it's brought that figure down before it rose again last year. And there's your number. And yeah, it would make sense, folks, when, anyway, the whole home housing crisis. But for many homeowners, yeah, it's expensive to get out of that house, whether you're paying closing costs, right? And then if you're giving up on a mortgage that has something like 20 years left at 3.5%, oof. You know, maybe the government does something, makes those mortgages portable, right? Sellable. That would be a big factor that would allow people to get out of those homes, because right now the incentive is just not there. I tell people often, you know, if you have the ability to keep that home, rent it out, right? Buy yourself another home. I know it's not always easy. Sometimes you need equity in there. You could even refinance it, and you could add a second home mortgage. The key is not giving up that mortgage. People don't understand if you're not in the financial world. I imagine many of you do if you're out there listening to this program. But to give up on a mortgage that has 20 years left, and I say give up, right? You sell that house and you pay off that mortgage early. Folks, you had a 20-year loan at 3.5%. Never sell it. Exactly. Never sell it. Okay? Especially when, right now, folks, okay, the agenda is going to be to run this economy hot, and it might be the best thing to do. But there's a real risk when you run the economy hot that you're going to have inflation. And guess what? If you have inflation, you have assets, okay? And so the worst thing you want to do is not have a house, be worried that there's going to be runaway inflation, and, you know, meanwhile, you're giving up a mortgage for something that's going to cost you 3.5%. Anyway, it speaks for itself. So, yeah, people are staying in their houses, and hopefully they get some portability. Hopefully we get yields down to a reasonable level, because the housing prices are not going back down, folks. Okay, the median home price, it's not going back down. Cities that you're seeing people living in, right? You see the ADP wages out today. Like I mentioned, people are still making almost 5% more a year staying in the same job. And that is in 2026, when those numbers have been getting compounded off of 2021, 22, 23, 24, 25, and now here we are in 26, right? 6 straight years. If you just had a 5% wage growth for 6 straight years, you're at 30% more wages. Yeah. So if you're making 60 grand in 2020, you're making 78 grand in 2026. So it's not going back to that value, but in the same accord, you know, out here in Lakeland, Florida, right now, Winter Haven, Bartow, okay, you can still get great houses, folks. You know, we're talking about the Lennars, the D.R. Hortons of the world. Sub 300s for a brand new 3-bedroom, 2-bath house in a cookie cutter neighborhood, okay? But guess what? That neighborhood's got a pool in it, right? It's got a playground in it. It's got CDE fees. It does, but you're getting into a brand new home for 300 grand. So the homes that are in these big cities that are $1 million, that are everywhere, right? You're talking about Tampa. You're talking about St. Pete, okay? Beautiful homes in St. Petersburg are pushing $1.5 million right now. And that's not talking about a St. Petersburg waterfront estate, folks. Okay? The homes that are pushing $1.5 million in St. Pete right now are just in beautiful neighborhoods, somewhat located near downtown. And I'm talking about not like 15 streets away. I'm not talking about you're living in the high rises that are selling for $13 million in downtown St. Pete. Okay? I'm talking about living in a beautiful neighborhood near Central, maybe 25 streets away from the water in downtown St. Petersburg, the core of it on Central. $1.5 million for a main home that is a reasonable 2-story, beautiful home with a garage and an ADU in the back that is nowhere near the water. And we're talking about $1.5 million, okay? So you can have both, as in there's still affordable houses. You're not going to be living in the city. Right? Same thing's going on with Boston. Remarkably, when I was living in Boston in 2005, before I came down to Florida, I was still living at home. It's 2004, technically. All right. I was 24 years old, graduated from college, moved back home, living with my mother. Great setup. God bless my mom. And one of the reasons why I made the move down to Florida at that time, folks, was because Boston was already experiencing what Florida is now, right? If I wanted to live anywhere near the city, that was not happening as a 24-year-old, even with a degree from Villanova. But guess what? I came down to Florida, and I was able to get a 1-bedroom apartment in a complex with a pool for $500 a month. And so you're going to start to see that type of thing happening, whether you're talking about people finding places with affordability. Lakeland, Florida is one of them. All right, we're coming back with Teddy, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And man, we got some volatility. How about that Dow from that acceleration? We were at 48,800. Dow just traded down almost 400 points from where we were on the open. Volatility continuing. The dollar right now, right near 99. And as we do each and every Wednesday at 40 past the hour, folks, we're going to jump over and talk to our man, Teddy Kegstad. You can check out Teddy's outstanding weekly newsletter, folks, the Tiger Forex Report. He puts out new issues every Monday. Updates throughout the week when warranted. You gain access to a webinar in there as well. It's only $97 a month, folks. It comes with a 30-day money-back guarantee. So you got nothing to risk. We got a lot going on in this Forex and market in general going on. Teddy Kegstad, good morning.
Good morning, Tommy. Can you hear me okay?
I got you loud and clear, man. It's perfect. I know we got audio today. And, hey, we got whether you call it a war, it looks like a war, but we got action over in the Middle East, man. And we got action in currencies. If you could talk to me, what do you think about this dollar and what we got going on in the markets, Teddy?
Well, yeah, yesterday I think really was the big day when it comes to the dollar, but not all of the currency pairs are moving. I mean, the U.S. dollar Canada has been in a range trade for 3 days. It hasn't gone anywhere. You know, definitely in your majors you do, of course, you know, especially with the euro and the pound, but then they're also much closer to Iran and the Middle East than we are. So that also has a bearing on it. And then also there's also the oil issue. Now, I was thinking about it. It's kind of funny. This is the first time in decades that oil actually has moved because of any conflict in the Middle East. Really. I mean, we've talked about this before and in fact, it was only a few years ago when the Straits of Hormuz was, blocked, and basically they had issues. Remember when oil tankers were getting, jacked and, restricted from getting through there? Yes. Well, the price of oil didn't move at all, So, I mean, now all of a sudden it is moving. Now, in a normal world, it should. For decades it wasn't. And I was thinking about it yesterday, and I was watching how the 10-year and the interest rate markets, especially the 30-year, reacted. And then I was thinking about it. Well, it's March. You have the end of quarter. We're in the middle of rollover for all the financials for the March contracts, flipping to June. You have options expiring in 2 weeks. And I'm like, and then I'm thinking about it. It was a week. We were shut down over the weekend. Monday, we have this knee-jerk reaction with this big volatility. I mean, they have over a 3-handle range in the Treasury bonds in 2 days without any type of... See, it was flight to quality initially, and then they tanked. First, we had yields go down, prices going higher, and then all of a sudden they slammed, like the floor got ripped out from underneath them. You know what I mean? So for when you see a reaction like that in a situation like that, for what's going on, I was thinking about it last night, and then this morning I'm like, it was just a knee-jerk reaction. I honestly don't think that it was, especially when I listened to what the one Fed chairman or the one Fed governor was saying. Okay, that guy really has a bias to begin with. If there's a few people on the board there who would come out and speak like he is doing right now, he's definitely one of the number one guys I would see getting on his pedestal right now and giving a speech like that. So and
was
taking
that, were you
advantage
talking
of the
about Williams or
situation.
Kashkari or which one? Williams. Okay, I see. I see. Yep.
So, and I think that's really what this is, and it's a distraction also. This is a news-driven distraction, so I just want to say that they can only pump this story for so long. No man is bigger than the markets, and I really think it's a knee-jerk reaction. You can see by the way the volatility has dropped today, so there's no reason with no numbers that were that significant, especially when we have significant numbers coming the rest of this week. You know what I mean? Like, that's where I just look at the interest rates. We're coming into a Fed meeting, and I just think it was just a derivatives, blowout. It was a liquidity trap that happened on Monday, and it was so severe that it was overdone. You know what I'm saying? Like, they took out everything to the upside, and then they just, drove it all to the downside.
Kaboom.
There's nothing left. So that's the way I'm looking at it.
Nice. And is that, so you're talking yields, and do you think that could potentially be like the similar action in crude, or what do you think about crude? It was quite the spike, and then there's a lot of fundamental movement, of course, right now in this market. You got headlines out there, right? Then the Navy's going to be guarding the ships in the Strait of Hormuz. It drops. What do you think about crude? Does that play in somewhat similar, or we got crude near almost $75 right now? How do you think about that one?
That's another one, too. I think that's a knee-jerk reaction. I think it's overdone right off the bat. I mean, the reality is 1 or 2 days does not a war make, So, I mean, I know that markets are forward-thinking, but you're pricing in, and the way that the headlines have been going, it's like, okay, so you're already pricing in that we're going to be in a conflict a year from now, and things are going to be still really bad. That's the direction you're looking at. Like, I think that's getting way, way ahead of yourself on that one. You know what I mean? And whenever you have, like, the most momentum by the news and the talking heads, it's not like I say fade them every time, but when you see it like this, it's like, okay, they're pushing this story so hard, there's no way that they're that right, especially because they're all in sync at once. I don't like that. There's too many. It's not just the main, it's from the financial sector talking heads into mainstream media is pushing this too much when it comes to the markets. It's like, okay, you're going outside of your realm of knowledge, and you're trying to tell people what's going to happen. You know what I'm saying? Like, that's where I start to get worried.
Okay. And you talked about the dollar yen. Can we talk about the dollar yen? Because
Sure.
you got some movement there, of course. We're right back up kind of as we have been, right up to where we were kind of in February, that highs. I got a 157 and change right now on the yen. What do you even think about that? Because you've told us so many times, I always think about you, man, when, we got action in crude. Boy, we got action in crude right now. And, of course, You've taught us that America's a producer, Japan's a consumer. And what do you think about that dollar yen?
Well, that's what goes just from what I was just leading up to with that stuff before. That's why I'm looking at look at what happened with the yen. Since Monday, I mean, they had a little bit of a rally, but nothing major.
No.
Not considering the levels, considering the reaction from the other currencies and what the interest rates did and oil did. Why is the U.S. dollar yen should be right now trading above new monthly highs, trading around 159.5, 160. That's where they should be. They should be every bit of $3 higher than where they're at right now. So if they're not trading $3 higher, I always, you've heard me say this before, the best indicator for the markets is the markets. You know what I mean? So when I look at a major market like that, and then there's a relationship, they don't care about the oil from the Middle East because they get it from us. But I'll tell you what, who does care, and this is where it makes it beautiful, people don't realize what's going on here. We just put a stranglehold on, they say 20% of the world's oil. It's 25% of China's oil. That's a big deal for them. If this really restricts production to China, that's good for us. They're our biggest enemy, for one. Also, Iran right now can't make and sell drones to Russia that they're using in the Ukrainian conflict because of what's going on. We're bombing their factories, and right now they can't produce or ship anything out of Iran if they're in a conflict with us. So that puts another stranglehold on Russia simultaneously. So we'll see how this whole thing pans out. That's why I don't think this is going to stretch out for very long. It has too much global implications with our enemies, where they're going to be just like, okay, Iran, you got to slow down here. You know
Let's
what I mean?
hope so, man. I hope it all slows down. Totally. Hey, we only got 20 seconds. What do you think about gold at 51.60 right now? A little pullback yesterday.
Yeah, I think if I'm right about the interest rates, gold just make new highs then. That's where you'll see your flight to quality.
Folks, great information. Check out that Tiger Forex report. Comes with a 30-day money-back guarantee. Teddy, thanks so much, man. We'll talk to you next week.
Sounds good, Tommy.
Thanks, man. We'll come right back.
Trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and we got some action to kick things off. S&P's up by 0.1%. A little bit of selling coming in right off that opening bell. You hit a low of just under 68.20. We were coming into the opening bell at 68.57. Okay, so you're talking about 40 points in the S&P. It's just like that. Keep your spikes up in this market, folks. NASDAQ showing strength up by 0.7%. You got the Dow, as I mentioned there when we started talking to Teddy. Dow traded down 400 points from highs to lows on the open, and the Russell positive by 2 right now. We take a look at the heat map. This market, you kick it off with the S&P 500. Micron up by 3%. You got Amazon up by 2% out there. Tesla up by 1.6%. Healthcare stocks in the red. Consumer staples as well. Walmart off by 0.7. Energy stocks giving back some of the recent gains. And real estate as well. Jump over the NASDAQ 100. Yeah, mixed bag out there. Healthcare, consumer staples on there in the red. Let's jump over to those housing stocks. Yeah, this is going to be a critical area. You want this area to hold in terms of the lows of the beginning of the year for Lennar. We just backed off from 120 and change. We're at 106. You take a look at the volume in these equities. Now, they don't get a lot of volume anyway. All right? We talked about this on a weekly basis. You're only doing 1 million shares a day in Lennar. Not a lot of shares. And we're below the week of February 2nd now. And we did a lot of volume, though. We did almost 17 million that week on Lennar. We jump over to DR Horton. All right, we got a lot of strength on the upside. No real volume on the downside on these equities. And KB is looking particularly strong on the upside when you get volume as well. Look at the accelerations, right? You get volume on the way up, volume on the way up. We're backing down on lighter volume. Last week, you did almost 3.8 million shares. This week, we're at about 2 million so far. And again, you got lows out here pretty close, $55, and then you got lows back here in 2025 of about 50. We check back in on yields. Yeah, we'll see if it was a head fake, as Teddy was talking about. You know, you take a look at the volume on this 10-year, folks. Going to be interesting to see what kind of volume this week, because last week we had volume for higher price and lower yield. S&P's up by 8. Basil Chapman coming up next, folks, for the Tiger Technicians Hour.